This episode of TechCrunch Live is presented by Drata. For startups, committing to security and compliance is vital to growth, and that's exactly where Drata comes in. Drata is the fastest way to achieve and maintain continuous SOC 2, ISO 27001, and HIPAA compliance. Drata customers report saving up to 85% of their time, as much as 500 hours when using the product compared to doing SOC2 manually. Learn why Drata is trusted by brands such as Clearco, FullStory, Smart Recruiters, and more. Get 10% off at drata.com/TechCrunch. Hello, everyone, and welcome to another episode of TechCrunch Live. My name is Brian Heater. I am the hardware editor at TechCrunch, and I'm going to be your host for today's show. TechCrunch Live is all about connecting founders with tech leaders to build better venture-backed businesses. TechCrunch Live also features a pitch-off. Audience members can raise their hands to pitch their product to our guests and get live feedback. If you want to participate, follow the instructions in the chat. And final note before we begin, we do have an audience Q&A open during the conversation. If you have a question, pop that in chat and we'll get to as many as possible. Now to introduce our very esteemed guests for the show today. Layla Sturdy is a partner at CapitalG, where she has invested in companies like Duolingo, Gusto, UiPath, Uncork, and whatnot. She previously worked as a managing director of emerging businesses at Google. In addition to that, she also serves on the board for Webflow. And that brings us to our other guest, Vlad Magdalin. Vlad is the CEO of Webflow, a web design creation and hosting service that he co-founded in 2012. Prior to that, he worked as a senior software engineer at Intuit. All right. Thank you so much for joining us today. Very excited about this conversation. I had another question that I was going to lead off with, and then heard the two of you talking in our warm-up about when and where you met, which I think is pretty relevant to the fact that we're doing all of this virtually right now. The two of you met for the first time during the pandemic. Is that right?
That's right.
That is correct.
How did that work? And when we say met, I mean, you mean actually in person, not just on Zoom.
That's right. I'm happy to start, Vlad, and then jump
Layla,
in.
you tell the story, sure.
Yeah. So let's say I'd been very interested in Webflow from afar for a number of months before Vlad and I actually met. Started doing research on the company, started reading a lot of the stuff that Vlad was publishing, and getting to know him from afar through what was on the internet and what I could learn through mutual connections. And we started to exchange some emails, and then had a couple of Zooms and got to know each other a bit. And this was about 15, 16 months ago. So it was the summer of 2020. And so we were still in the heart of the pandemic when, really I was conducting mostly all of my business on Zoom, and just starting to sort of see some friends and family outside 6 foot at a distance. And I remember our first couple of conversations over Zoom. I was, really enjoying getting to know Vlad, and very, very excited about the business and excited about, the potential of investing. And so floated the idea that maybe we could get together in real life, which at that time sounded like a very unusual thing. So Vlad and I were just joking before. I don't think we totally realized it, but for me, it was my first meeting with someone outside, someone new outside my very, very immediate circle when we met up towards the end of the summer, beginning of the fall in 2020.
And it was for me too. And I think even for somebody that wasn't new, like it was just the family that was our closest bubble. And I think the walk that you and I took around that park was the first time because I didn't even see coworkers in that interim.
Same.
It felt like a little bit, even though we were fully masked and like distant, and it was pretty weird in the sense that I don't think either one of us have had like first meetings like that before, but it was awesome in retrospect.
Yeah, I'm trying to put myself back in that time. Obviously a lot has changed since then, but on the flip side, sadly, some things have not changed all that much since then. But there were all the precautions we have now. There were, as there still are to some degree, questions around obviously social distancing and wearing masks outside, things like that. So that seems like a pretty big jump to take in order to meet somebody in person. Again, as far as I assume the vast majority of these sorts of conversations and deals are happening virtually anyway. What made you want to get together in person and hash this out?
Well, I'll jump in a bit there. I think one of the things that I loved about Vlad from the first moment that I met him, and where I felt like we shared a similarity, is that for both of us, I think it's really important, the people that we work with, that we know them on a personal level, and we get to know them kind of as a person and a human and a parent and a friend and just a person in the world before we dig into the exacts of the business and all of the other things that you evaluate when you're figuring out kind of an investor founder pairing. So that, I know we had some great conversations over Zoom, but feeling that sort of shared chemistry to make sure to get to know each other more, and to get that, continue that excitement and confidence that we wanted to begin a partnership, which will hopefully last many decades. I think that is what made me really excited to be able to get to meet Vlad in person, because as great as Zoom is, and it's great for certain aspects of the business world, to me that in-person experience you get, it sort of takes you to the next level of getting to know someone. And so that's how it felt from my perspective.
Yeah, and to me it was a same themes, but additionally it also felt, speaking of families, both Layla and I are parents, where we had made commitments to school to be, like really closed off in terms of like who we're interacting with. So to see that commitment played out in real life, right? Like we weren't just meeting together and then like breaking all the rules. Right. Yeah. None of us was like taking our masks off or like getting, super close, et cetera. Like it was another way to honestly like evaluate how, like what people say is important to them, and like how they act. And I'm sure that was on both sides. And for me, investor relationships are so deeply important. In fact, Layla, I don't know if you'll remember this, how quickly you responded to this, but like Webflow, we do something kind of weird in that every single investor relationship, we've signed something called a social contract before we even talk about terms. And it has like all of these high level things, like we don't believe that the sole responsibility of a business is to return value to shareholders at the cost of everyone else, or that family and individual relationships shouldn't be burned for the pursuit of short-term, business pursuits, et cetera. And like how quickly Layla resonated with that, and kind of we went back and forth so much on just those principles, that once you have alignment on like a human and values level, you just want to get to know that person so much more. And there's no replacement to doing that in person, as much as what run a remote company. And most people, like there are people who work at Webflow and on our leadership team that have never met in person before, but I'm still hungry too. Like when the world opens up to be able to do that. One of the things that we used to do all the time was annual retreats as a team, and you just cannot. There's no way you can replace that with the virtual world. There's just too many human aspects that you just need that energy in person. And I think this was in that vein, where we were both hungry to like spend more human time together outside of the box.
Yeah. And the only thing I'd add to that is when Vlad started talking to me about some of the principles that he really believed in and his values as a person, as a leader, it was so inspiring, because it gave me a inkling into how he thought as a person and how he was thinking about Webflow, not just as a company, but as a movement and as a community and as a group of people, really trying to change, change how people build for the web, but also change their lives and their relationships in the process. So I was so excited to have those type of explicit conversations in the beginning, because, as I said, it's so important to me that I have values alignment with the people that I work with. And Vlad made that so easy because it was such a a strong part of him that he brought it into the conversation from the beginning.
Yeah, Leila, on that note, you talk about the human element and the friendships that you build. I mean, are there, obviously without naming names, are there cases where you felt really strongly about a company or a product, but it just didn't make sense in your portfolio because you weren't able to connect on that level?
Absolutely. So I think that, and I'm sure, I think, again, with investors and founders, it goes both ways. I think for me, it is really important that the investment is a partnership, is that we're investing money, but we want to invest much more than that. We want to invest our own blood, sweat, and tears and the resources of CapitalG and our network into helping make the company as successful and the founders and the whole team as successful as possible. So I have found, I've been an investor for 8 years. I was an operator for many, many years before that. And teams have always been kind of the foundation of what I care about and what motivates me is the kind of the people that I'm showing up every day to solve problems with. And I think I've also been both investing and operating long enough that I've been through a lot of ups and downs. And I know that particularly in the downs and the hard times, if you are not really locked arms with people and there's really mutual trust and respect and care, then it's a really miserable place to be. And so I feel lucky that I have the sort of good fortune that I'll work really hard and get to know a lot of different people. And but I want to choose to work with the founders, and I want the founders to choose to work with me that really kind of share that vision of partnership over the long term, because I think it's just critical to. These are long relationships, and company building is incredibly hard. And so I think we all have to kind of show up with our full heart and our full effort to be really good partners. And that relationship is essential. That doesn't mean you have to be best friends with everybody or similar, or like the same music or whatever, but it's that sort of, we care about building a similar company and have similar, values and ways that we want to go about it.
By the way, that's one thing I wish as a founder, somebody had told me earlier, that it's okay to aspire to and expect in a partnership. Because, when we first started Webflow, I started Webflow 4 different times, but the most recent one, the common knowledge about venture partnerships was, you optimize for check size, or it's it's going to be this board that you're accountable to, and that's your boss. And, they're there to return money on capital, et cetera. And it almost made it really scary. And it made it a more one-sided sort of equation where it's like, it's a little bit more, wouldn't you be lucky to work with like specific investors because they have the biggest brand and the biggest like pocketbooks. But what I wish that others had told me earlier, that you get it is in many ways like a marriage, right? Where there's so many ups and downs, where that partnership of like having common goals and actually knowing that the other person cares for you and considers you their equal, not like a subordinate or somebody that is, you owe something to, et cetera. Like that partnership is just so much better when it's a partnership. Right. And I think I was always scared of like the VC relationship early on because of like the story around it. But there's also a lot of horror stories, right? Where investors come in and then they just like control the business or kick out the founders, et cetera, because that relationship wasn't built from the ground up in a mutually beneficial way. But like, if there are founders listening, just encourage you to spend time to like really get to know the people that you're going to partner with. Like Leila said, it's a multi-decade journey, and there's going to be a lot of downs, even with the ups.
Yeah, the two of you connected around Series B, and obviously, Vlad, for you, and for all investors, really, it's probably easier to really aggressively vet who you're working with once you get to that stage, right? I mean, you can be a lot choosier once once you're a couple of rounds deep.
Yep.
All right, so I'm not going to let that comment about starting the company 4 times slip by unnoticed. I do want to talk about that, and in a second we'll be getting into the company's deck, which is the Series B that Layla and CapitalG were pitched. Before we go down that road, Vlad, I want you to sort of take me through the early days of these conversations with VCs, and what did your initial pitch and pitch deck look like?
Mm-hmm. Well, Webflow had kind of a weird story historically, like where we tried to raise funding, weren't really able to. That was part of some of the early failures. And then in this last iteration, we were lucky enough to get into YC and then had a pretty sizable seed round. For these days, it sounds like pretty puny. It was like $1 million. But then we couldn't raise again. We just weren't growing fast enough a year later. We just weren't seeing like the venture type of growth that would have made Webflow appealing to investors. So from 2014 to around 2018 or so, we just kind of went heads down and focused on building a profitable, sustainable business where we could just rely on our own revenue. And even though it's not 100% pure bootstrapping, it was still we weren't looking at external funding to keep scaling the company. And around 2019 is when, I think at that point we're already at something like $20 million in recurring revenue. That's when there was more interest in both from our side to like really speed up our ability to keep building towards our mission and vision, which is really ambitious and just needs to build a lot of hard things that don't necessarily generate revenue right away. And there was interest from the outside around like, hey, this is actually a community and business that is taking off and there's more word of mouth and you can see a lot of signs there. So our approach wasn't a like, let's go out and fundraise and make it super formal. It was just, let's try to have as many conversations as possible with both folks reaching out to us and us reaching out to people either coldly or through warm introductions to start the conversation around like our mission and vision and kind of what we're looking for in a partner, et cetera. So it was a very like organic, lower pressure situation because we had the benefit of being profitable at the time. Like it was we had infinite runway depending on how quickly we hired. So that just didn't give us a sense of urgency to like go with the first person that offered a check, et cetera. And then it really did, like I built up more and more confidence around like talking at the values level. Like this is the kind of company I want to create. This is the kind of product I want to, and our team wants to make real in the world and the kind of mission we want to land, not necessarily something that is like hyper revenue optimized in the next couple months or a couple of years. And that honestly weeded out a lot of investors. Like you could tell in a lot of conversations, people would push almost immediately towards, well, why aren't you going 100% into enterprise? Why aren't you like selling to Adobe in some cases? Like this seems like a sure bet. And you could tell pretty early whether people were oriented around the very long term, like the vision that we're trying to talk through, which is way beyond websites. That we want to empower people to create all kinds of software and just democratize the act of software creation. And it was relatively very few investors who like resonated with that. And the ones that were able to in conversations after first conversation come back and inspire our team more so than we were already inspired. That's when you knew that they could see what we see. And that's when you see that it's like, it could be a great partner who sees like the direction that we're heading in as being a really awesome one and can add their perspective and their like, all of their knowledge, all of their experience across many different companies. So it was a mix of like those kinds of conversations. And then, you would put together a deck in order to, once you had conviction with a partner, they would need help to like sell it to the rest of the firm. And that's when we would put together a deck with like more details, how the business is doing, kind of telling the overall story that the partner that we're talking to, you know, in our Series B case with Layla, in like earlier conversations with other partners, the deck wasn't like something where we just like sent it out without context. It was already, we were already having relationships, and then that was used as a bolstering effect to show a lot more of the foundational kind of strength of the business and direction of the product, et cetera. So it was kind of, I don't know if I would use the word iterative or a little bit organic, but I would say it was not the thing that sealed the deal most times, right? It was just the personal relationship built up that then led to needing to create something like that deck to sell other folks.
And I'll say it in my words, to build on what Vlad said. By the time I saw the deck, I was already 100% plus in. So it was, I was like, oh, this is helpful. Okay, I could use some of these for my investment committee. But you know, had made my mind up a long time before that I really wanted to invest.
Yeah. So the deck is like almost a good safety net. It's like, get yourself out there and try to have these conversations. And it's a good thing to fall back on if you need it, but not necessarily the thing you should lead with.
It also is a great forcing function to get yourself and your team to think about the major themes and kind of factors of the business that is very useful internally. So it's a storytelling tool more than just for investors.
Liz, as you alluded to earlier, Webflow, it sounds like they were on your radar for a while. Was it something, were they a company that you had considered investing in earlier? And if so, why was the Series B the right time?
Yeah, so they got on my radar because I was spending a lot of time in the no-code space thinking about, so probably about a year before I invested in Webflow, I got really excited about what I still believe to be one of the biggest trends in technology, and that is the potential for software to impact every single industry, to impact workflows across the offline and online world is immense. And we're still only very, very narrowly penetrated against that software opportunity. And yet we have a human capital shortage. We have the number of coders out there, the number of people that know how to code is way less than could ever even begin to address the demand for software. So I've been really excited about this idea of no-code platforms and thinking about how you can take business people, creatives, just anyone who has an idea and has a solution, and enable them to build software on a platform. So I think this is a multi-decade compounding trend that we're going to see. So I got really excited about that idea, and then went very, very deep in learning the products and the businesses of kind of every no-code or low-code player out there that I could talk to and research. So I did an enormous amount, my team did an enormous amount of research just on the market and the opportunity, way before, honestly, we got like a good dialogue going with Vlad, because the truth is, someone like Vlad is very sought after. People knew Webflow by the time the Series B came around, was still in its early stages of what it will be as a business, but had a vibrant community, a lot of product love. There was, awareness that this was a really good business. So Vlad had a lot of people reaching out to him, I'm sure. And so, what I often think about from an investor standpoint, often the very best opportunities like that are going to be highly sought after. And it's about the investors have to work to sell themselves almost more than founders sometimes. And the way I love to show up on that is, because it's what fires me up as well, is if I do a lot of work on the market and the opportunity and the product before I have even the first conversation with Vlad, then I can show up and show him how much conviction I have in what he's building and how much excitement I have for it. And that was definitely the situation here. So I had had done quite a lot of research before we ever met. And so it was just super exciting to then be able to get the inside story from him. And I could ask a lot more thoughtful questions, I think, because of that research ahead of time.
Yeah, one more thing, and then we can start breaking down this deck that we've been looking at. Vlad said it's not just a web design company, or it's not just a web hosting company, and Layla, I think something that you're getting at here is looking at kind of the long-term ramifications. What does this platform mean beyond what it's first essentially being served up as? Now that can potentially be a difficult conversation between a startup and investor from the standpoint of, again, something Vlad said earlier of, not wanting an investor to come in and basically like force their vision on somebody. So what was that conversation like? I mean, was that what the two of you were talking about in this walk that you took of, what purposes can this platform fill beyond web design? Vlad, we can start with you.
Actually, I think a lot of Layla had very early conviction that or at least the story in my head is that the product was heading in the right direction. And we spent quite a bit of time thinking about how, we'll go beyond websites into applications, et cetera. After we really nail it for websites, that is. But I think a lot of the conversations went into what can be done to help get there faster, right? Like, what are the leadership sort of gaps that we have right now where Layla can help hire people or attract other folks from other huge companies that she's helped support before, that are now available or whatever, or thinking through just the details of the business to figure out where we're not paying enough attention to specific opportunities, or not seeing certain warning signs, or the things that could be huge areas of exploration that just because we don't have like that level of pattern matching across so many different companies. I remember the conversation went into that pretty deeply, where it became more and more obvious how that partnership would, where 1 + 1 is more than 2, it's more like 10, where, what Layla would bring in terms of knowledge and experience in the space, and just generally scaling companies and things like sales and marketing and go to market, is so different from like the skills we already have. And there wasn't, from what I remember, any questioning of like the direction or vision of the company. There was already conviction around that. So I think that even when there was, internally to Webflow, we have this, we call them core behaviors, but they're essentially values lived out in real life. One of them is practice candor with care. So it's like, elevate things that you see to be true, or things that are not going well, but do so with caring personally for the other person, right? Otherwise,
just be cool about it.
Yeah, exactly. And there were quite a few conversations, both before we officially partnered and after, where it's that sort of sharpening of like, hey, this could be better, or there's this opportunity that you might not be seeing, where it was that kind of push, but it wasn't like any sort of questioning around, where the company is headed is not the right place, right? I think there's always been alignment on that. And it's kind of a funny position to be in. And I recognize the privilege of having investors come to a company, especially when, our first time around, we had to pitch like close to 100 investors and only a couple of them said yes. And that felt like super demoralizing, right? But even though it took us, 6-7 years to get to a place where we felt like in control of our own destiny, meaning that we didn't have to feel desperate to go raise. I think that founders always have that lever potentially, where they might have to live out smaller ambitions for a while, but then they can have a lot of time to consider the right next step. So sometimes founders take too big of a shortcut to try to find like the biggest check, and then they get themselves into a situation where they're like, in over their heads potentially.
Layla, do you, I assume to some degree when you're vetting a company like this and you see that, as Vlad said earlier, that there were some, let's call them false starts, in the development, do those sorts of things send up red flags for you?
I think we look at everything in the context of the history. I mean, I think looking at the history of a company and the founders and stuff, there's so much to learn. When I looked at thought of the journey of Webflow prior to us investing, it certainly was interesting to me to say, okay, there were periods of time where they were really building a lot of product, and the maybe some of the business metrics we're not potentially growing as fast as some other companies. And so the question there is always to just ask why and sort of what's going on. And when I dug in on the Webflow side, honestly, it excited me more than it scared me, because the parts of it that were exciting were just to talk to Vlad about it and talk to the entire Webflow team and realize, again, they had such conviction in this product, and it's a complicated product. Like, it's a platform that requires a lot of investment to be able to deliver value to customers. So there was, some products you can build with a couple engineers in a year and just start scaling ARR. Others, it takes more building. So I think there was an element of that in Webflow, which, by the way, again, once you get through it, is a huge moat and a huge advantage, because it means it's going to be a lot harder for new competitors to come after us. And then there's just another element of, this is a new trend. Like, they're inventing a new category of being able to, have a no-code platform where creators who aren't coders, aren't technical, can create software applications. And there's a period of, growth in community evangelists that go from sort of more niche super fans to broad adoption. And I think what is exciting about that is when it works, you see these businesses have really good bottoms up momentum, but it takes a little bit of time to build. But then again, it is so powerful because the bottoms up momentum from a company that was close to profitable for lots of periods, had lots of organic traffic, had huge community evangelists. Those are incredible assets. That sort of money and hyper growth that is driven by just spending can't produce. So when I looked into okay, why is this happening? It all made a lot of sense to me. And I thought, wow, this is actually a huge advantage that they invested in the product, that they've built this bottoms up growth. And they're now at a point where it's a great opportunity for a growth investor like me and CapitalG to come in and say, hey, there's even more, there's ways we can do this even faster now, because our foundation is so strong. So that's how I thought about it. And I think every company is unique. I mean, I've had several companies besides UiPath besides Webflow. I was thinking of UiPath on that same thing. They were around for 10 years before I invested in the Series B and had a similar trajectory. So I think there are some great examples of companies that have built into their really best-in-class product and market position.
Yeah, I'm guessing that even at Series B, by the time the vast majority of companies come to you, they aren't profitable, right? That's probably an extreme rarity.
Very unusual. Yeah. Very unusual.
Yeah, so
and usually for good reason, because it's usually because there's sales and marketing and hiring channels and stuff to invest in. But it's very rare. I mean, I think that what Webflow has shown from bottom up, product-led, community-led growth is very, very rare. Most companies have to, especially in the enterprise space, it's more common in certain consumer platforms, but in the enterprise space, you typically have to spend very heavily on sales and marketing to acquire customers. So it's an incredible, I really pay attention when I see that, because that you can also invest in the sales and marketing channels to scale it, but it's very hard to create the opposite where it's not there.
Yeah. Let's look at this pitch deck again, Julio. If you can do me a favor and just start flipping through this slowly now. Vlad, we were discussing this ahead of time, and you were kind of poo-pooing it from the standpoint of like that it is relatively basic, but not nearly as basic as a lot of the ones that I've seen. Can you take me through some of the differences between this Series B that we're looking at and the earlier seed and Series A decks?
I think the Series A, by the way, this deck has some stuff redacted in it. There are a bunch of like financials towards the end. That was like the biggest difference. But in both decks, it starts with like storytelling, more just like history and how we got to where we got. Like I think this timeline shows the multiple failures over the years with different founding teams, et cetera, and finally broke through in 2012.
So that's something that you were not only willing, but kind of eager to sort of put up in front to tell the specific story of the failures that you experienced.
Yeah, I mean, I think that initially that in earlier conversations with other investors, especially at our seed round, that I stopped saying that because, there's a certain privilege to being vulnerable when you're successful, right? So then it wasn't a good thing. And at that time, unfortunately, you couldn't even mention that you had kids to investors because they would like assume that you wouldn't work as hard, et cetera, or the business is more likely to fail. But at that point, I spent a lot less time talking about that. But in the last couple of rounds, 2019 and this most recent one, I think it really helped with the story that the idea was always the same, and the world is changing so slowly in regards to teaching people how to code, that trend, that timeline actually reinforces the need that what we're creating is really important, and that the other solutions aren't filling that need. So I think that really helped both from a resilience point of view and also from a, hey, this kind of solution needs to be built. And just to give you a sense of scale, actually, I know Layla alluded to this, but right now in the software creation space, like I know a lot of listeners probably know software engineers or have software engineering teams that are accessible to them, but we're kind of in the Renaissance era of where writing used to be. So if you think back to the 1700s, 1600s, when the printing press was first invented, really everyone was starting to learn how to read, but it was really like the sub 1%, like churches, heads of state, rich people that had access to a printing press. And those are the people who had the power of distribution of words, ideas, laws, et cetera. And it took us 400 years for generally the world's population to have literacy, to be able to use the power of language to spread their ideas, to be a lot more of producers than consumers and owners of the content and the ideas that they create. With software right now, we are at 0.25% of the world that is able to truly create the types of software that can be monetized on the internet, that can help people make a living or build a tech company, right? So that value accretes to the relatively few. And we're still in kind of the Middle Ages when it comes to the creative power of software and the internet, especially the economic power of that. So that is how far we are in terms of this problem being solved, right? And like Layla mentioned, we're not training software engineers fast enough. And coding, paradoxically, is getting even more complex because now we have this paradox of choice of thousands of frameworks. And like even software engineers who have been trained for 20 years are burning out on the complexity of even code-driven, architectures that we're creating. So this is, it's a huge, huge problem for the world in terms of like making the full potential of the internet accessible. So I think telling that story is with the right investors, like they saw, and Layla saw like the scope of that problem and how ill-defined the solution is, right? Like you can't expect that you're gonna like solve this problem overnight, let alone even like maybe even in 5 years, you're not gonna have a clear line of sight over how big the opportunity is. And that's when you knew, like in those conversations, when you tell that story, like people, when they're still interested and they get even more excited about like, okay, they see the scope of the problem and the opportunity, that's what leads to, further exploration of like how the business is actually doing, et cetera.
Yeah. Julia, if you can keep cycling through these for now. So Layla, I know, again, as you said earlier, obviously the pitch deck is not what what tipped you over here. But looking at it now and knowing that, there are obviously a lot of, website creation companies out there. There are a ton of different companies competing in the no code space right now. I mean, is anything kind of jumping out at you as something that made you want to invest in Webflow versus myriad other competitors?
Yeah, I would say, when you invest in a Series B company like Webflow, where they had really good traction already, I think the key question I'm asking as an investor is really trying to study the traction they've had to date and understand, is there something particularly exceptional about this? And then looking at the bottoms up data and then looking at the tops down, saying, is there something exceptional about this problem, which is usually the market. You're looking for like an exceptional big picture opportunity. And then you're looking for the sort of bottoms up data to kind of give you some degree of proof that it is exceptional. So that's really what I was looking for. And I think both came through in this deck. And like I said, I had the decision before the deck, but it was also because we were talking about similar principles that were in the deck prior to that. And then my research that I did independently also backed up, similar things. So I thought what they did a nice job doing here is sort of painting the big picture opportunity. And it is like actually one of the largest market opportunities out there. Then also saying, but we understand that's massive. Here's how we're going to focus. Here are the first couple of things we're going to knock down. So you get that sense that this is a team that sees the big picture, but they also understand the complexity of execution and can, try to make the sort of right decisions in terms of prioritization and order of that. And then what's probably not in the deck now, because it has to be redacted, is the financials. You could see the basics that you need in a growth deck, which is here's a historical revenue ARR growth rate. Here are the unit economics. Here are the type of marketing channels that we're that we're invested in and where we see more opportunity. And then a sense of how they did, is this a team that does what they say they're going to do, some degree of like, do they have some operating cadence that that they've able to deliver on what they say they're going to do. So all of those aspects were in the deck, and all of that was fed into our investment decision. But like I said, I could figure that out pretty early with these guys. So this was one of the easiest investment decisions that I've had to make. But those elements are typically quite hard to actually distill in a growth stage opportunity, because the company might be growing really well, but you're not totally convinced that the market is as large as they think it's going to be, or it might seem like a really big market, but you're like, there's a lot of hiccups here in terms of the historical growth. Why is it execution or is it actually opportunity? So that's the kind of thing that you're typically looking for in a growth stage deck. Yeah,
I like with the redacted financials that we still have that graph that just like
up to the right.
Up. Well, that looks good. That's the right direction.
Yeah, exactly. Where do I Venmo the money? Exactly. Yeah. There you go.
By the way, Leila, I know you said this was one of your easiest decisions, but I think like your best decision is probably Whatnot, because you can also add it at the end of every other list of companies, invest in Webflow and Stripe and Whatnot.
Sure.
And there you go.
It's like naming your company, etc.
Yeah.
Cool. All right. Well, this has been super helpful. Thank you so much for this. And as I talked about at the top of the conversation, we do have a pitch off here. So we're going to be talking to two companies right now, and no winners, but an opportunity to get some insight into a very early stage company, and the two of you are going to be here to offer them some feedback as well. We are going to be kicking things off with Donna from Media Mash. I'm going to take a second to get Donna on board.
Hey, Donna.
There we go. Hello.
Hi guys, how are you?
Good.
Doing well. Thanks so much for joining us. So you're going to see a timer on the screen that's going to count you down, and you're going to have two minutes to pitch, and then we'll be giving you 5 minutes of feedback from there. So, and you are go.
Hi, I'm Donna Valerio. I'm CEO and CMO of MediaMash. We are a video management and live stream shopping platform. We were developed by me, a digital strategist, and my co-founder, who is an open source developer. We are giving brands back control of their video content from social channels. I'm on a mission to bring traffic back to your customer's website, to your brand's website, and away from social channels. We used to do outbound marketing, then inbound, then social. And with MediaMash, I really want every brand to drive their traffic back to their website, because you've spent so much time and money, and I think this is with Webflow perfect, really creating that customer journey and the perfect website with the perfect content. And then we're driving brands off-site for their video. And when you use MediaMash, we give you such a better customer experience, right? We're in the customer economy, the experience economy. Brands really need to show off and connect with their customers and tell that story. So by driving the traffic off the distracting social channels and back to your website, you get the customer data that you're not getting. You get the opportunity to have e-commerce. We index and meta tag all your video and put it in a bucket on the cloud for you. So you get all that rich SEO value that you're losing when you go to YouTube. We also have identity matching. So when you come to the website with MediaMash, we can possibly give you the email address and contact information of the person without them even filling out a form. And we have video pathways and an AI-driven video player that will be Netflix-like. So if you watch one video, we can put hotspots on it. We can drive you down the funnel by suggesting other videos that are related to that. So, and we do live stream shopping.
Great, Donna, thanks so much. Layla, you want to kick us off with any questions or feedback?
Yeah, sure. Well, Donna, thank you so much. Great to meet you. If you could just tell us a little bit more about exactly what the product is, and if you have any customers that have already adopted, maybe share some customer success stories in terms of what you enable.
So we started just about a year ago. We built a web conferencing tool with a live stream function, and we did it with a control room, so you can change who's speaking. We have a chat. So we did it a little bit different than Zoom, and it's URL based. So you put it right on your website and you don't have to give someone a Zoom link. So we're already on the website. We have ad banners. So if you're doing a web conference, you can have ads supporting that web conference. We have a button where if you're trying to sell something, you can just click on a button and open a checkout, and a flyout. Have a transaction and still be in the webinar. And then we also can live stream to social channels if you still want to do that, and index and record it, as well as index and meta tag all the video you already have existing. So we built that portion of the platform already, and we got pre-seed dollars. We are just signing our first beta client with a company called VinoShares. And what they do is they're a marketplace for wine clubs, so that the wine clubs can have online tastings using the MediaMash platform, and then have e-commerce transactions on the VinoShares marketplace. I actually just pitched Procter & Gamble, and I'm waiting for a second round with them, because consumer product goods especially, they're losing a lot of business to Amazon. And P&G has hundreds of thousands of dollars invested in video that they're not getting the right ROI on.
So is it right to interpret that right now most of your platform helps better monetize and engage and use that sort of content on the customer site once a user is already there? But yes, you're not driving you're not finding users elsewhere in the internet and driving them.
No, and I'm not telling people not to use social channels, but use them for top of funnel and then drive the traffic back.
back. Yeah.
But also you're getting such great SEO, I say juice, and my co-founders cringes every time I say it, but you're getting such great SEO juice with your video, and YouTube's the second largest search engine and they're getting it. And like I've done website strategy for many years and I just feel like it's such a lost opportunity. Brand safety is an issue. I go to marketing webinars all the time and the cookies going away. There's just so many things. You can have a chat on your website. The experience is so much richer, so much better, personalization. There's so much you can do when you're on your website.
Can I ask a clarifying question? It sounds like there's a heavy emphasis on live or like webinars, things happening in real time. But in the original part of the pitch, it sounded like there's also static video embedding and hosting.
Yeah,
okay, so it's like to replace something like Vimeo or YouTube embedding in the site, right?
Yeah. Yep.
Okay.
So Vimeo, yeah, they embed it in your site and you're not getting any of that value. But also with an AI player on your site, unlike YouTube, we can drive you down. We can put hotspots on the video where you can learn more of different things and have the e-commerce within the video.
Super helpful. Donna, could you share a little bit of pricing for your solution, and then anything and what the customer feedback has been on that so far, and how they kind of quantify the value that they're getting?
Yeah, so we are thinking about between $5,000 and $10,000 a month for the platform license and support. And then the indexing and meta tagging can be around $750. It depends on how much video they have and how much live streaming they're doing, because the broadband charges are expensive. So with our beta client, we're charging them, I think $5,000 to get everything set up, because we white label the conferencing tool. So it has all your logos and colors, and then we're charging them just $1,000 a month to start for the first year, and we guarantee them the first year at that price.
Great. I know we're almost out of time, so I'll leave a little.
We can go a little over. Yeah.
Okay, awesome. Well, first of all, Donna, a super compelling idea. So thank you for sharing it with us. One potential idea for feedback is to frame it more in the beginning, less about taking the traffic away from social as a starting, maybe saying like, hey, all these brands have all this traffic coming, and we've built the platform to enable them to monetize it, enable them to get richer data about their customers and strengthen that relationship. So sort of the enabling technology for what's already coming to them. And then phase two is, once they have that and they're all this value, how do they get a greater proportion of the share away from platforms is one idea.
Yeah, I agree with that feedback. Even at Webflow scale, even if we could embed have full control over videos embedded into our marketing sites, et cetera, we would lose a huge advantage to people naturally searching on YouTube, because there's so many more people there than are coming to our website.
Mm-hmm.
And that would be a disadvantage to delisting on YouTube, that I think leading with that pain removal could also, in some customers' minds, translate to, well, I'm going to lose more traffic as well. So I agree with Layla's feedback there.
Great. Donna, thanks so much for joining us.
Good luck, Donna.
Best of luck.
Thank you.
Cool. So coming up next, we have Avi from Causal Funnel. As we get ready for Avi, I had a question for the two of you. During that conversation, and Vlad, I know this is probably something that you thought about quite a bit in your own deck. How much time in a pitch or a pitch deck should a startup spend talking about the competition?
Probably very little and later, and if questions come up. I think it should be a lot more offense than defense in terms of when you are trying to show investors or potential employees or anybody that you're trying to attract to care more about your company, to really focus on the opportunity rather than the risk of what could go wrong. You should definitely be prepared to speak to the worst thing that could happen. And I've seen this in multiple pitches where an investor or an advisor will ask, hey, what if this competitor does this? And the pitching team is not aware of that competitor. That is a pretty clear sign that, that team, even if they have a great product, might be working with blinders on. But I think it's really good to be educated and prepared, but I wouldn't proactively focus on here's how we're better than the competition, unless it's pretty clear that the competition is like very, very, established, entrenched, and not a great solution.
So Zoom or YouTube in a case like that is probably okay to mention, but don't really drill down on the hyper specifics.
Yep.
Great. So Avi, we've got Avi coming up next from Causal Funnel.
Might be at the top of the funnel and moving down.
Yeah. All right, there we go. There's Avi. Hey, Avi.
Hey, Avi.
Hey.
I gotcha.
Abby.
Awesome. Thanks for being with us today. So just like last time, you're going to see a timer. We'll pop up on your screen. You're going to get a 3-second countdown, and then you will get 2 minutes to pitch. It should be coming up in a moment, and you are go.
Hey guys, I'm Abhi. I'm the CEO and co-founder of Causal Funnel. At Causal Funnel, we are predicting buying intent to improve the conversion in the cookieless world. As Donna was talking about earlier, cookies are going away. And you guys know better than me, especially Vlad and Leila and Brian, websites store cookies to A, track if you're a returning visitor or not. And B, there are these third-party cookies as well, where they share data across multiple websites to basically personalize when you go to a website to buy or do your purchases. But due to GDPR and CCPA laws, the third-party cookies are totally gone. The first-party cookies with the new Apple ITP push, Intelligent Tracking Prevention, they're getting wiped out in 7 days. So if you visit a website or an app, 8 days later, they won't be able to know if you're a returning visitor or a new visitor. So that's where we come in. We are using just the first-party data to not only give you with high level of statistical accuracy that you're a returning visitor, but we use that to build a persona of the user and then improve the conversion by predicting the buying intent of the user. And then if they're about to drop off, provide them a personalized nudge. So that's where we do, our AI and machine learning expertise comes into play. And we just started five months back. We are already serving 80 million unique visitors annually. We have around 35 customers and around $72,000 in ARR. We are also raising money. We already raised around 150K at 7 million market cap, and we'll start raising again very soon. So thanks a lot for your attention.
Great. Awesome. Thanks so much. I think Leila kicked us off last time. Vlad, do you want to kick us off this time?
Sure. Avi, thank you so much for the presentation. Sounds exciting. And I'm totally aware of all of these changes in the website world, et cetera. Can you help me understand the technology itself? Is it a front-end solution where you are adding something to a website, or do you actually need to work in implementation into a company's backend to be able to
so no, we it's very simple plug and play. So basically what happens is, as you add like a Google tag or Facebook pixel to your header, you just add our script to your header, and then you don't need to change anything in the back end. In fact, we can integrate our dashboard with, Shopify dashboard or your own personal dashboard. Some of our companies have used our deep ID and personas to, in fact, track sessions on their end, because we are much more accurate than AWS or anybody else who is helping you track your sessions.
And if you're actually able to track a session to a specific user, I'm curious how that is compliant with GDPR by default and the consent rules.
That's a great question. A, there is still some noise. B, we are not taking any personal information. So there is no personally identifiable information leakage. We don't care about your email. We don't care about what you do. We don't care about any of your other things. All we care about is whether you are going to buy this product or not, right? And the data is highly de-anonymized, no emails, no phone numbers, no addresses.
So you can't track it to a specific user, is what you're saying?
No, we do not track it to a specific user. We track it as a buyer. That's it.
Makes sense. I'll let Layla throw.
Yeah, Avi, you're congrats on the traction and the number of customers and the ARR in such a short period of time. I'm curious to learn more about your customers, like are there certain industries, like what has resonated, and any quantitative sort of value prop that you're seeing in the early days.
Yeah, it's been quite a successful thing so far. Typically, our customers see around 250% increase in return on investment. To quote you just a figure, one of our customers, CherishX, they increased their total order count by 11% just by deploying our persona predictor using first-party data. Typically, in the beginning, we are going for e-commerce stores, but as you can imagine, and you are a better person to basically judge here, is that anybody who is selling anything online, they have a landing page, they will need to boost their conversion. And in fact, B2B companies need us more because for every lead, they spend a lot more money than retail customers, right? So that's our typical customer profile. But in the beginning, we are just targeting retail and e-commerce.
And what is driving that increased conversion? Is it that nudge that you mentioned? Like somehow
Yes,
Okay.
Exactly. Yeah. That's a great question again. So, the cart abandonment problem is a massive problem, right? Around 75% people abandon their cart. If you can predict the intent before abandoning and the persona of the user, you can actually, kind of cut that abandonment down by quite a lot. So that's what is improving the conversion.
I see.
And what action do you take once you've predicted that? What action?
So for example, a user comes to the site. We know she came back, or he came back, 2 weeks back, or a similar persona. Then, based on her browsing behavior or his browsing behavior, we'll know that she's about to abandon or not. And then if she is looking for deals, so she's a deal shopper, we can personalize on us saying that, hey, buy within 2 hours and you'll get 20% off. Right? So that basically creates that FOMO and people convert.
Great. So I know we're getting close on time, so just some quick feedback. It sounds like a really compelling idea. Maybe in the beginning, I would suggest you went into quite a bit of detail around the cookies, which maybe was too much for only 2 minutes. I would maybe just sort of say, changes in these cookie laws. What that means is that all these e-commerce sites need to find other solutions to drive conversion. We have a solution that's GDPR compliant, regulatory compliant, that helps to fill in some of that conversion loss, and then kind of go into what your tech does a little bit more.
Got it. Thanks.
Awesome. Avi, thank you so much for joining us.
Thanks.
Avi, good luck.
Best of luck.
Thank you.
Congrats on progress so far.
All right. Vlad, Layla, thank you so much for joining us. Hopefully we can do this again in person someday in the not too distant future. It's been a lot of fun. Thanks so much. And thanks to everybody else for tuning in. TechCrunch Live goes down every Wednesday at noon Pacific time, 3 p.m. Eastern time. We will see you next week.
Bye, everyone.
Thanks, everybody. Bye, Vlad. Bye, Brian.
Bye.